Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Tuesday, the 14th of February. I'm Daniel Lam, your host for the podcast. Well, without sounding too obvious, naturally, when investors make an investment, they want to be able to achieve their desired returns in the shortest time period possible. Many of them ended up chasing the momentum of an underlying. But the risk there, of course, is that the underlying may have already seen its peak and may start to lose its momentum. Now, Hang Seng Index is actually in that camp right now, at least for the short term. Recall in this podcast, since Chinese New Year, we have been telling you to be patient and wait for better entry levels ahead. Now, over the last few sessions, we have seen key immediate support being broken, which were 21,380 and 21,085. Yesterday, the index tested the low of the gap at 20,800 and rebounded back above 21,085. But the volume was not so high yesterday, so this rebound was not so convincing. In fact, we're noticing bearish crossover from directional indicator, i.e. the DI lines, as well as the MACD. And more importantly, there's a very dangerous head and shoulders pattern emerging, which means there is likely to be more correction ahead in the short term. Now, this head and shoulders formation is very useful because it can give us more clues as to where the correction may take us. So, measuring the top of the head, which was 22,700, to the bottom of the shoulder, which was at 21,085. So there is 1,615 index points difference. Now, if there were to be a full correction, the index may fall from the bottom of the shoulder, which was 21,085, and you take away 1,615 points. That equals to 19,470. Actually, that is very close to the 19,300 support level that we've been mentioning in our previous podcasts. So be patient and aim to buy Hong Kong China equities if the Hang Seng Index goes closer to 19,300 level. You should look through factors such as geopolitical risk and focus upon the strong rebounding growth that is likely to come from the reopening, as well as the stabilization in the property sector. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.